Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on May 8th, 2014. And if you watch the markets today, you'll be proud to know that I'm not going to whine today. I'm going to try not to. I may break down and cry, but I'm not going to whine. It is what it is. Before we take a look, let me read this to you. The website and this video are for educational purposes only, and nothing stated at the side when the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, first thing I want to say is getting things right in this mess that we've been looking at over the past 10 weeks or so. I mean, we've made some pretty decent calls, but I keep thinking we're going to go one way or the other. And I think the call that was a good one was that we would challenge that 1884, 1885 level again, and we did, and 1884 won again, even though we got over it. Today, approaching almost 1890. I think we probably got up to 1888 and change, just eyeballing it. It's not important really to know whether we got to 1888.47 or 1889.03. I don't think that matters. What matters is the fact is that we went up, got above this line, and then failed to hold it. Gave it up again. What was interesting was the fact that this little inverted head and shoulders pattern that we looked at yesterday didn't quite meet its target. Not quite. Almost. If we measure the full depth of that head, you'll see we should have gotten up to about 1890, close to 1892. Didn't quite do it. Then we came back down, fell back through not only this little neckline, and again, this is a tiny pattern, so it matters. That really comes as no big surprise. If this pattern had been spanning weeks, and we spent 3/4 of the day over this level and then came down underneath it, that would be a little bit more surprise. But this pattern formed over about a day and a half, a little less than a day and a half, and we spent a little bit less than a day over the neckline, and now we closed right at about that level. What came as a little bit of a surprise today was taking out, at least temporarily, this red line. That tells me that there's still some strength in this market. It's just every time it gets exhibited, it gets matched with some weakness. So, it is what it is. I'm not going to complain. We also got over this green line. You remember I pointed that out? And that was the line that said if we can get over that, then we'll, all likelihood, we'll get on up and test 1884, 1885 again. We did, and like I said, 1884 won. We could look at this little wedge and say it did what it was supposed to do. Once we got above that, it kicked us back up to challenge the levels that were in place before that wedge started to form. That's good. Oh, by the way, I thought I'd point this out. We've been talking about this 1840 to 1850 range as being a little bit fuzzy, but an area where we've gotten support. I've gone ahead and I've extended this 1840 to 1850 gray area on out to the year 2023, and I've also done the same thing with this 1884, 1885 line. It now goes out to about 2023, just in case we stay in this area for the next 9 years or so. Just kidding. But guys, here we are. We're still going sideways. I must be frank, I have no real clear sense on where this eventually goes. I can tell you this. I was just kidding. It didn't really go out that far. I've got this out to the 19th. But what I can tell you is this. If this red line has now been flipped to resistance, then going sideways for a week, going sideways to down for a number of days, really wouldn't be a bad thing. If you look at this as being an important barrier, it's rising at a pretty good clip. So if we can continue to go sideways without breaking down, then that means whenever we do get over 1884 in earnest, then we may see again headroom to make the mid-1900s. So that could also kind of explain how this line right here might come into play as well. You remember we drew this over these two tops back in April. So guys, here we have it. We're just kind of right back in the same old. I will say this. We had this line as well drawn over the all-time high back in April, and then these two little peaks in the latter part of April. We saw how this line also got tested on the 29th. We got over it. We have gone around and through this line a couple times, but if we look at where we bounced today, it's pretty much right here. And we closed very close to this green line again. So all hope is not lost by any stretch. But again, just another day of a little frustration, getting teased with the idea that maybe things were going to get worked out and we were going to get a sense of direction. Sad to say, it's now been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, more than 10 weeks. And we're still just doing the same thing. So be patient. Eventually this gets worked out. You can see with this resistance line right here, especially with this dip, if we keep going sideways for a bit and we get over that, we should be achieving a level over this line equal to how far we fell underneath it. And I remind you, that takes us up to the high 1950s. Keeping my fingers crossed. I thought I'd just hit pause here. There we go. Every now and then I'll click my mouse on the pause button on my screen capture software and nothing happens. So I apologize for the dead air right there. Anyway, thanks for watching. Take care and look for the video tomorrow.